CF benchmarks.
What you're about to hear is a recording of a CF Benchmarks X Space captured live.
Everything on this show is for informational and educational purposes only. It is not investment advice, and nothing we discuss is a recommendation to buy, sell, or hold any asset. The views are our own and do not represent CF Benchmarks, Kraken, or any affiliated firm. Any price targets, valuations, or models we mention are illustrative and not forecasts. The participants and their firms may hold positions in the assets discussed. Digital assets are volatile and you can lose your entire investment. And some products we reference may not be available in your region. Always do your own research and consult a qualified financial advisor before making any decision.
All right. I think it's time to kick things off. We've got everybody that's participating is in the room. Sound check's been cleared. So let's begin. So good morning and welcome back, everyone, to another CFB Talks Digital Assets Live. My name is Gabe Selby. I'm head of research at CF Benchmarks. We, of course, are the leading index provider in the digital asset space, and I'll be hosting you today. With me, as always, got Mark Pilipczuk, Tomas Perfumo, Peter Stern, and James Flamant from our product team is also going to be joining us today. And our special guest this week is no one other than André Dragosch. And André, did I pronounce your last name correctly? Yep. Okay, perfect.
Yeah, that's fine. Dragosch.
Dragosch.
Fine, yeah. Thank you.
Perfect. Well, we're really excited to have you here. He is the head of research for Europe at Bitwise. And we're going to be covering quite a list of topics here today. We're going to be talking about the crypto market cycle, whether or not we believe crypto has bottomed. Of course, I think that's something that has been top of mind for everyone. We're going to be talking about, the treasury market, the Fed, what's going on with that. Of course, have some macro data tomorrow, so we're going to be giving our points on the week ahead. And there's just a lot of, I think, things happening in the markets, from earnings to innovation, that's really been, rippling through price action. And I think we can kind of touch a little bit on all of that. But before we do, André, I wanted to give you a chance to introduce yourself to the audience. Of course, everyone knows Bitwise from the excellent products that they launch and offer. But I think it'd be great to kind of get your story on how you joined Bitwise and also your background a bit.
So the long version or the short version?
Why don't we do a medium
No,
version if that's possible?
Yes, of course. So let's talk about my private experience first. So private experience essentially since 2014. And first institutional experience actually started in 2018 when I was working for a medium-sized family office in Germany. And that was when this kind of retail hype happened back then, right? ICO hype. And so everyone wanted to know about blockchain tech, Bitcoin. That was essentially my first task back then, right? Like a 30-pager on like Bitcoin, blockchain tech. And since then, so I think I went full time into Bitcoin/crypto in 2022. So I've been in the industry full time for like 4 years now. But I've been like a crypto analyst before then. But I've been analyzing like all kinds of assets, right? In my previous life, I used to be like cross-asset analyst. So I was covering all kinds of assets, equities, bonds, commodities, and so on. So a lot of macro topics. But crypto was also one of my hats that I wore back then. And so, so I've been covering, I've been observing the space from a professional perspective, at least since 2018 and full-time since 2022. And I joined Bitwise essentially in 2023 when I joined ETC Group. And then, of course, ETC Group was acquired by Bitwise in 2024. And then ETC Group became part of this global Bitwise family, right? And we became essentially Bitwise Europe.
Yeah, and we, of course, have been long partners with Bitwise. And we're excited with the partnership with ETC Group when you guys were acquired, and been following along with your Crypto Market Compass, which is a weekly publication, correct?
Yes, exactly. Yeah, we do publish a couple of reports on a weekly and monthly basis. So the weekly reports, is called Crypto Market Compass, and it's more like a data-driven piece of research where we look at performance, sentiment, flows, on-chain developments, but also derivatives, right? So it's like a very broad spectrum of things that we look at. And it's very much complementary to the CIO memo that is published by our CIO Matt Hogan in the US. And we also publish a monthly format that is called Bitcoin Macro Investor. And as the title suggests, it focuses on Bitcoin and macro topics, right? And so, I mean, we always try to speak the language of like traditional financial investors, right? Institutional investors. And especially that piece is like directly appealing to these types of audiences, you know. And apart from this, we do also have like an ad hoc piece, ad hoc format like Crypto Market Espresso. But usually we only publish this one once there's some kind of market correction or crash, you know.
Yeah, no.
But that's about it.
I love it.
And of course, all kinds of deep dives, right, around like single tokens and so on.
Yes, I follow your research analyst team. I see Ish posting a lot of photos recently about this research layer and all the individual tokens. But you mentioned that you like to tie in the macro with the crypto. It's something that we also try to do as well at CF Benchmarks. It tends to be something that really can drive price action. And with price action, I'll kind of run through kind of where markets are running right now. Bitcoin's trading at 64,000. I think it's been really in this consolidation band for quite some time, around like 63 to 64. Not really giving us too much of a read on any sort of directional move out of that. But at the same time, we've had a lot of directional moves in commodities. Brent broke through 80 yesterday on the reports of a 60-day interim deal and to reopen this the Strait of Hormuz, which of course is going to impact all sorts of things, when we talk about the inflation picture and the Fed. And that's kind of led to, I think, what we've seen, some appetite in the spot ETS for Bitcoin. We've had 2 straight days of inflows. And meanwhile, to go along with like the macro thing, we saw the ADP number in the US printed 44,000, which is the weakest in 6 months. There's just 2 days before this payroll is what's going to happen tomorrow. My question to you, as we kind of kick off this conversation, we can kind of go around the horn, but let's kick off with you, is has Bitcoin bottomed yet? Are we in the kind of the final stretch of this market cycle, which has been going on since I think we saw that extraordinary liquidation event in October? You've been on the record, I think, saying that this cycle is going to bottom a bit earlier than the traditional 4-year cycle, which I think puts it sometime in October. Has anything changed?
So I think we already bottomed, but in relative terms, right? If you look at a Bitcoin against gold, right, we essentially bottomed in February, right? It looks like since February, Bitcoin has been outperforming gold, right? If you look at Bitcoin versus Nasdaq, I think we've already started to outperform in June, right? We've been outperforming the Nasdaq since then, essentially. And I think, like, my general take on Bitcoin is, from a macro perspective, it's this kind of canary in the macro coal mine, right? That tends to anticipate changes in financial conditions, both to the downside but also the upside, right? And I think the underperformance that we've seen in Bitcoin from October onwards, so essentially the bear market, was also consistent with like underperformance software stocks, credit leverage loans, right? Spikes in the like hyperscaler CDS and all stuff, right? That implies some kind of tightening financial conditions. And I think this underperformance in the bear market of Bitcoin was totally consistent with this picture, right? And that being said, I think there's now a high chance because Bitcoin has anticipated this, and also I also think that Bitcoin has priced in a lot of bad news already, right? Because what's puzzling many analysts is Bitcoin has been moving sideways essentially since February, despite the fact that we had a flurry of very bad news, right? Straight of moves, like the AI trade unwind, BIP 110, quantum risk, you name it, and sovereign debt blow up, right, and so on. So I think, despite the fact that that the market has thrown everything, the kitchen sink at Bitcoin, right, it's continued to consolidate, continued to move sideways, right, and
That is,
that tells me a lot of bad news has already been priced in. In fact, if you look at the macro discount, and we've quantified this in one of our pieces, like how much is Bitcoin undershooting like the overall macro picture in terms of forward-looking surveys, and it's been the lowest discount since COVID, right? So a lot of bad news had been priced in. You had like massive sentiment capitulation, especially in February, right?
right.
And what I posted just recently was it's very funny, and we can actually feel this, but you can also see it in the data. The sensitivity of Bitcoin to bad news, so negative sentiment changes, is at the lowest since FTX. Like Bitcoin doesn't care about bad news anymore.
Yeah, no, it's been
Uh,
interesting to see. I feel like we've seen, this long history of long duration sensitivities to rates,
yeah,
and impacting, long duration equities, impacting Bitcoin, impacting gold. Really, it's like, equities continue to kind of march higher, and Bitcoin kind of did it's kind of paid its dues. Really, it's the rates have continued to move
exactly.
higher, and Bitcoin's kind of stuck here. But I think it's just interesting to see that sequence and how that's shifted with this, I would say, with the earnings season,
Yeah.
with all the fundamentals driving the AI trade, and then also with Bitcoin. But I didn't mean to cut you off there. I'll let you.
No problem. So the sequence is a good keyword because like many analysts, they've been puzzled by the fact that you had these big divergences, right?
Yeah,
Bitcoin
Andre,
was
I think
mired
you
in the
might
bear market,
be
while
I think you might be
Nasdaq
cutting
made
out
new
a little
all-time
bit,
highs,
or it might be
like
me. Can you
made
guys?
new
No,
all-time
he's
highs,
he's
global
cutting
money
out for me
supply
too.
made new all-time highs, and so on, right? But I think this this correction in Bitcoin is some
We can
people.
hear you. I didn't know if there's
Mhm.
like a better spot, um, to
Yeah.
get
Okay.
a better connection, but maybe in the interim, why don't I pass it over to
Yeah.
why don't we pass it over to Mark here, who's been looking at kind of our crypto cycle engine that we run here at CF Benchmarks, and kind of go through what it's saying and some of the indicators that we look at for bottoms.
Yeah. Yeah, just to kind of run through at a high level what we're seeing just on the fundamental side of the market is there's really only what the main catalyst that's left, the last shoe to drop is the Clarity Act. It looks like that's probably there's been no vote and there's a day left in the Senate, so procedurally they can't get to it before the recess. Then we move into midterms. The odds in my mind of that happening this year are now virtually zero. So in terms of like, has Bitcoin finally bottomed? If we are to get another leg down, my thought process would be that the probability of that going to zero is the last thing that needs to be priced in. And, maybe we come in and sweep the yen carry trade lows at 50K or something, and we wick down over the next couple of weeks as that gets priced out. Now, when we talk about some of the technical things on the broad market that we look at, the broader crypto market, we have the CF Broadcap Index, which aims to track about 99% of the investable universe, which makes up about the top 50 tokens or so. And most metrics there that we look at suggest we're still in a bearish market structure. So what we look at first is market breadth. So we'll look at the number of tokens above or below their 200-day moving average. We're still seeing 60, 70% of tokens below 200-day moving average, most of them below their 100-day moving average still. We have seen some of them pick up and come above shorter term moving averages, so 20 days. So we are starting to see a little bit of pickup and some positive thrust in the market, but breadth is pretty weak. If we look at the headline index relative to its 200-day moving average, we're about there, under it, still kind of in that bearish structure. If we look at some of the breadth, some of our metrics of dispersion, there's really not great return dispersion there. Nothing's really picking up yet. And then another thing we look at too as well is when we talk about kind of retail demand, or that those next buyers that come in, we look at a lot of the funding conditions in the futures market. So we'll look at the futures basis on Bitcoin and Ether, as well as we'll look at the funding rates on hyperliquid or other perp markets. And those are still relatively compressed, which suggests that there isn't a ton of retail or that speculative demand coming back into the market yet. So for now, we're still in a bit of a bearish structure according to the indicators we're looking at, but it's likely that move is probably that downward pressure is kind of starting to get a little exhausted.
Yeah, I was looking at our dashboard this morning. It's really a tale of lower time frame breadth. Participation is trending upwards, but it's not in any way, shape, or form getting to that confirmation territory. What we really want to focus on is that thrust component. That's something that in traditional equity markets is super important. So it's really, when you think about thrust, it's not about price velocity, it's about participation velocity. So how fast the share of the index is turning up together, how fast are they expanding together, and then we have to test whether that holds. So we score it in two ways. We have the advanced thrust, which is a 1 week burst where we measure the share of constituents rising together to clear a certain metric. And then we have a confirmed thrust where that expansion has to hold through the following weeks instead of fading. So none of that's kind of fired yet. So Andre was giving us a great example of how he's measured Bitcoin as kind of this barometer against the Nasdaq, against gold, and how that's already started to bottom. When we switch it over to this index view, this kind of index lens, we can go into other ways of kind of measuring these bottoms as well. And I want to pass it over to Tomas. Tomas, I know that you got a view here. What's your take, real quick? Do you think we're bottoming, or have we bottomed yet?
I actually kind of, my point of view is that a lot of it hinges on the Clarity Act. I have a narrative thesis that if you get Clarity Act, which right now is prediction markets have priced at like 15 to 20% chance that it passes this year. So you've already had a lot of like negative pricing on the expectation side here. So if you were to get some kind of surprise upside and a breakout of the current range, my expectation is that you would see some follow through with Bitcoin ETF flow starting to pick back up, because they've been positive but very modestly so. Which is a flip from what we saw in February, where we saw a flip to positive flows, but they came in pretty strong and led the trend through March and April. And so my suspicion is that if Clarity Act passes, you get ETF flows coming back, price starts to break out, and a lot of the people who've been kind of sidelined around cycle timing as their narrative framework start to look at the calendar and say, am I really going to wait another 2 to 3 months when I'm seeing the momentum play out now? And they start to question whether the June 58,000 price tag was the low, and that it came a few months earlier than perhaps the cycle timing would have explained. The flip side is also true, where if Clarity Act doesn't pass, I think that the expectation is already low, so you don't get as much downside. But I do suspect that you continue to have this kind of like weak momentum from the ETF flows, which in my opinion are the marginal buyers of Bitcoin, given that MicroStrategy sidelined. And that leaves you with the only other narrative, which is the cycle timing one, which is kind of a weak one when you think about it, because the question that people look at when it comes to cycle timing is how much longer do I have to wait and how much further down does it have to go? That's not really like a positive story to hitch your thesis around. So I'm very kind of binary around this Clarity Act condition. But for what it's worth, I actually do think the prediction markets have a hard time pricing the logistics around policy making and how quickly things can turn. So I still have some constructive optimism held out for this getting through.
Yeah, I would say the same thing. And Andre, I want to pass it back over to you. Tomas, you mentioned something about the fund flows. Uh, why don't we ask Andre, what are you seeing as far as like with these recent streak of positive inflows with these ETFs? Is this something of a more of a signal, or are we just kind of getting some new money entering the space that was really canceling out the money that left on Friday that we saw a lot of outflows on?
I hope you can hear me better now.
Yes, yeah, I think we can.
Okay, perfect. I also want to comment on the Clarity Act saga, but I think in terms of outflows, I do think it's a strong signal, because what we've seen, not only in terms of ETP flows, but also treasury company demand, is both of these things have actually decelerated to the lowest levels since, in terms of growth rates, right, in terms of flows, to the lowest levels since FTX again, right, FTX style levels, so low since 4 years. And so it's one of these things that are very asymmetric, right? It's like we already had a lot of outflows. We had, even Saylor has been selling Bitcoins, right? And so it's very asymmetric from here. It's very unlikely, because demand's already so depressed, that we move even lower. It's rather more likely that we continue to re-accelerate, right? And so I think there's some signal in there. It's like, I think 3 consecutive weeks of net inflows so far, right? After, I think, non-stop outflows for a couple of months, right? I do think there's a signal, and it's definitely positive, because we're moving from a very low base up.
Yeah, I mean, it does feel like there is some sort of I don't want to call it like definitive signals that we're getting that this bottoms in. I kind of feel like we're starting to see just sentiment starting to really hit that rock bottom. That seller exhaustion is starting to kind of become more apparent, and the recent streak in flows, I think, certainly corroborates that. Before we jump over to the next topic, which is going to kind of follow more on the innovation side and on-chain asset management, and we're going to talk about oracles, I do want to get James's and Peter's opinion on the bottom yet. So James, why don't you give us your quick opinion on whether we've bottomed or not, and then we'll have Peter close us out.
Hey everyone. Yeah, maybe on my side there's one thing that I'm looking at that haven't been mentioned too much is the implied volatility. I might have my opinion of whether we bottom or not, but I'm very interested to see what the market looks at. And so we've got the CME CF Bitcoin Volatility Index that just hits just below 36, lowest level since September, and the skew is still negative. So, but the cost of hedging the downside is really in the very low levels. So yeah, I don't yet see, the moment I'll see the skew around going back to around zero, which hasn't been the case for probably since 1010. At that point, I think we'll see a little bit more momentum.
Awesome. Yeah, that's a great point. And Peter, on the institutional business development side, what are you seeing from a sentiment perspective? Do you think we're starting to get to the capitulation zone?
Yeah, I think, I'm pretty optimistic. I think too, like, just, everything that's been going on, market climate, and then, everything political, and, we saw it, obviously decrease down pretty significantly, but also too, like, over the past, call it a couple months, as well as obviously all of the summer months, we don't see like a lot of money and like moving into, the wealth space, with like portfolio rebalancing. We saw some stuff with a lot of like the Bitcoin ETFs actually getting approved on a lot of wealth platforms finally now. So, those types of folks are not really moving money over the summer as well. So I do expect kind of in September, October. Again, I am pretty optimistic that we will see flows go back in there and see the price of Bitcoin go up.
Perfect. Yeah, I think that's a really good point. And with that, I think we gotta get through some of our other topics that we've outlined in our show notes here. So, one thing that I really wanted to go into details with Andre here, and because he is someone who's representing Bitwise, is the on-chain asset manager trend that we're seeing with vaults. If we zoom out, we're seeing these these asset managers become fully on chain with their portfolio construction, their execution, all moving into these things called vaults. Um, Andre, would you be able to kind of give us a high level of what a vault is and why this is so, I think, impactful for blockchain technology and also for I think the common investor? I think you might be on mute still.
Sorry, can you hear me? The connection was lost a bit.
Yes, we can hear you now.
Okay, perfect. So, I mean, a vault essentially. My personal take on a vault is, I mean, it's not like a true innovation in a way, right? Right? We had like ERC20 tokens, right, where you could actually essentially replicate the performance of any kind of multi-asset, multi-token strategy before, right? But I think it's now becoming more institutionalized, right? And access is being broadened. I think that's the key innovation here, right? And the cool thing is, of course, like it's similar to this kind of phenomenon of total return swaps that you see in the traditional financial sector, right? You can essentially replicate any kind of long, short, market neutral, or any kind of strategy with tokens, right? Even referencing traditional assets, not only crypto assets, and yeah, put it into a vault, right? I think that's pretty cool and pretty powerful, which means it becomes transferable 24/7, and you achieve final settlement right within seconds, right? And so I think that's a cool innovation in this context. And yeah, and I think it's definitely an upgrade to the existing system, you know.
I wanted to bring in our product lead here, James Flamant, who's very in tune with the Oracle infrastructure and all the things that are happening on chain. How does the move towards vaults impact a business like CF Benchmarks, where we provide reference rates for regulated products, in the ETF or ETP space, to also on traditional derivatives? What are kind of like the considerations that we have to take into account when we start moving things more on chain?
Yeah, so I think it comes naturally as we have more and more assets, financial assets being minted and existing on chain. They move on chain, and so if the asset lives on chain, it makes sense to also manage it on chain. So the vault is a natural development, I believe. I think it does redefine quite a bit what an asset manager does, like the role of an asset manager. If the management is done on chain, then you want some capabilities. You want some capability to manage portfolio on behalf of clients, the distribution channel that this streamlines. I think that's quite also important, even though institutions and retail might have different types of demand. And we're seeing that with Bitwise offering vaults on the institutional level. There's also a few right now. The vault emerged, really became popular about a year ago in terms of AUM, maybe 2 years ago. And I think we're going to see more types of vaults in terms of, so the vault allows you to give some transparency on what's happening, which is not necessarily, which is one of the pros of this. But on the other hand, you don't necessarily want to manage it yourself. You don't necessarily want to take custody of certain aspects. And that's where the asset manager can come in and manage that on behalf of the client, such that the user experience is as easy as it was before, but you get more transparency and more freedom to move your assets, and also in a 24/7 format. Now, that does mean that it's not that the risks are removed completely, but the risks are migrate effectively, right? So now you have, the curation is one of the risk. Hence, it makes sense for trusted actors such as Bitwise and others to do that job on behalf of the client, curate the portfolio. And you also have a few components that are that also become, what are the risks of what, it's more, what are the parts of the vault that you want to mitigate and where expertise is valued. It's a better way of formalizing it. And so, well, similar to ETF and ETP, you want to value that asset. You want to value that asset for different reasons, but mainly just because the asset sits in a whatever protocol you're using will value your vault A and your position on vault B, and etc. You might have margin, you might have different things, and coming in and out, basically creation, redemption, which are, by the way, out of the box 24/7 and automatic. So that is one of the big pros that you have versus a manual, a more TradFi ETF or ETP.
Yeah.
And so at that point, valuation. What is the index that you're using to value it? How do you mitigate that going wrong? Protocol risk, but more importantly, curation, right? If I've got stable coins and I want, to target 5-6%, someone is going to manage where that's, say, USDC is going to get allocated, the risk of it, the cross risk, and I want someone who's good at it. And I think this space started with crypto native. If you look at the biggest vault curators, Stakehouse, Godlet, at the time, MAV Capital, and you look at the new players on the block. We talked about Bitwise, on-chain solutions. I'll mention a few others, but Galaxy is now a curator, and Wintermute is now a curator. So you've got much bigger firms, much more mature, and firms coming into this space and thinking they and probably rightly so have value to add to the client. So yeah.
Last week we saw one of the largest hedge funds get margin called, and we all saw the drama that unfolded with the stories about OpenAI dropout, Prodigy creating his fund, getting margin called through the leverage bets that he was making, and then also Ken Griffin from Citadel swooping in and ultimately purchasing those positions probably at a pretty steep discount. And one thing that I like what you said is about the transparency angle with vaults, because with the traditional hedge fund, there's no transparency. You find out the news after the media reports on it. But here, as we're used to following crypto markets, you get the live read on when people start getting margin called on DEXs or through the blockchain. So it is kind of a funner. As someone who really likes to follow markets, it's kind of fun to watch it in real time. And certainly maybe we could talk a little bit about situation awareness later if we have time. But the thing that I wanted to throw it back to André with in Bitwise is is his opinion on where vaults sit on the adoption curve. We saw with the ETFs they rolled out, and those have been adopted primarily through retail type archetypes, and now we're seeing smaller IRAs and then wirehouses have approved them to be onboarded after they've done their due diligence, and so that the adoption has kind of moved along the curve. How far along are we, Andre, with the adoption of vaults?
So that's just my personal take. I do believe vaults are the future, right, of asset management. But I think these types of innovations, they usually take more time than usually anticipated, right? I think we haven't even reached this kind of exuberance phase. We're very early in terms of the vault adoption, right? Let's say if you compared AF with vaults, I'd say AI is probably closer to this kind of exuberance stage, and vaults are probably at least 2-3 years away, right? So we're very early. We are just starting to see more curated vaults coming online, right? And I do think there's already demand, even sizable demand, but it's not. We are not even close to like early adoption, I'd say. So I can imagine in like 3-4 years time, this is becoming like a much more prominent kind of topic, right? But I think you do see like the first serious projects being built, right? First serious vaults coming online right now. But yeah, I think ultimately everything follows this kind of Gartner hype cycle, right? But the good news is, of course, yeah, because we're still early, we haven't even reached the exuberance kind of
Does
phase of the adoption curve.
Does Bitwise currently offer vaults in kind of a wrapper that's geared towards like approved addresses, and is that something that's going to be opened up if that's the case?
Yeah. So we're providing even non-custodial vaults, right? Which is also quite powerful, I think, if you think about it, right? That the client can retain the access to their assets, which is pretty powerful. And I mean, we're doing like a similar kind of portfolio. I mean, we're investing into a portfolio of lending positions, right? On-chain lending that is then aggregated and funneled back to the initial vault investor, right? And so we do offer, this kind of product, and there are even more vaults coming, right?
Seen a lot of these vaults have been focused on carry and income. Is that a trend that you think is going to continue? And then I want to get Mark and Tomas their view on the vault trends as well.
Yeah, it's true. I mean, our first vault strategy was actually done with Morpho, right? And it was based on stable coins, right? It's probably more like a money market fund substitute, right? But more attractive, right? Because I think current money market funds, they yield around like, let's say 4.5% in the US, right? In Europe, it's even lower, right? If you consider Euro money market funds. And these funds, they yield around 6% based on stable coins, right? And so, I do think that this is just like the very first inning, but it's probably one of the stronger use cases, right? That you can arbitrage different yield strategies. And but I think eventually everything will move into vaults, right? Everything that is considered to be traditional asset management at some point will move into vaults. And the more tokenization you have, because it's dependent on all assets being tokenized, right? You don't have the full set of assets, right? You don't have the convertibility into fiat yet, right? So there's still many frictions, which is probably the reason why we are not like, we're still early, right? And so I think that's why this kind of lending product is probably the first stage. But yeah, ultimately I think we'll move everything on chain, including all kinds of complex multi-asset portfolios.
Yeah.
Perfect. Yeah.
One of
Mark,
the things that I'm the most excited about for vaults is the access geographically, because here as US based investors, we're pretty blessed that we have relatively easy access to any type of vehicle you want. You want leverage, you got it. If you want domestic equities, you can get them. You can get foreign equities packaged in ETFs. That all exists for us. But when you start looking in other jurisdictions, it starts to get more and more complex. You start to see higher fees than we have here in the US. And to me, that's the exciting part of vaults, is when you put them on chain in a decentralized fashion and you combine them with the tokenized equity product like X stocks, you can effectively create on-chain ETFs for a much lower price than exists currently. So that's kind of what I'd be curious to ask on the vault side of things, is what does the geographic breakdown of the people that are putting money into these things look like? Because my bet would be that it's probably non-US investors right now, mostly.
Andre, I don't
I
know if you
reckon
want
that.
to.
I
I
reckon
mean,
that's good.
truth be told, I think it's mostly North American investors.
Really? That's
It's not so much.
It's okay.
Because
Bring in the sauce here.
because we are more like I think Europeans, they're more risk averse, right? And because it's more like an crypto innovation, right? I think they are not the main clients yet, right? But as this becomes more mainstream and as eventually every asset becomes tokenized, I think, European adoption will grow significantly. Is my take.
I used to work at Deutsche Bank, and I know the German investors, it was really hard to get them to get equity exposure, right? That's probably what you spent your time doing, Andre, in Frankfurt, right?
Yes.
James, I know you were going to chime in there.
Yeah. I mean, the institutional part, I think, and there's the retail part. Both started with retail, like most things in crypto. I think it's quite difficult to know where, which geography each client comes from the simple fact that you only need to connect to a node, and we don't have a view on the IP of who connects to a node and delegate to, say, Morpho. But I agree on the institutional side. I would agree with Andre that I think US-based institutions are much more more risk takers to test things like vaults. On the retail side, I don't know. I'm French, and the guys that created Morpho are in France, and I know a lot of French people use it. I think the usage from the communication of Morpho is quite high from Europe. But again, very difficult, I think, to trace back. On the institutional side, I don't see Europe moving before the US does.
Yeah, I think that's maybe fair. So I see we're kind of closing out the hour here, and we've got a few topics that we should still try and run through. One is going to be a little bit more macro, so I want to save that towards the end. The first one, I kind of want to jump into kind of like the Oracle infrastructure landscape now with James. We've seen, I think, a pattern of, I don't want to call it events, but yeah, we've seen things that have happened with the SpaceX pre-IPO and Hyperliquids, perp flash crash in late May. We've seen network outages through Pyth that have where it's kind of stopped producing blocks on certain windows, and certain kind of, I think, we would call these behind the scenes kind of, most people that are trading on these dexes don't understand really what's going on. But if you're following the infrastructure as closely as we do at Safe Benchmarks, we're of course very attuned. James, could you give us your view on kind of like what's needed to bring more robustness into these on-chain offerings, like when you look at the Oracle space and DEXs in particular?
Yeah, I think you were saying, most traders don't think too much about those things, even if you go on Hyperliquid or whatever DEX, or it's not something that you think too much. Usually, the people that when it doesn't work start complaining is usually the market makers, that are more impacted and their margin. I think it links to what we were saying on the vaults, is that this is very new. This is very, very, very new. Even on the DEX, is the two big products on chain that have that are showing product market fit. It highly seems to be the case in the last 2 years, and in both cases, and in DEX even more, the perp highly depends on the price they use, and we've seen even on centralized exchanges, I think 1010 on Binance, but also on decentralized exchanges, when the index or the Oracle used doesn't behave as the user expects, then that creates a lot of chaos, a lot of liquidation cascades, and there's a lot of questions on RWA. How do you price it, especially pre-IPO? We're talking about private companies. This is a subject that, how do you price this? And I think similar to vaults, where on the curation side, we've had quite a few crypto natives that first started to do the job, and since it's become a much bigger space, we've seen bigger players like Bitwise come in. I think on the Oracle side, we'll see something similar, where market makers and market participants will tend to push towards a little bit more robust infrastructure on the Oracle side, and to make sure to make sure the markets on which they're trading on have similar guardrails and transparency that they do on the traditional markets, right? If you go on Nasdaq, CME, if you go on Kraken, if you go on a lot of big exchanges like this, how do you get on-chain the same quality of service, and how do you get the same predictability from the Oracle? It has an impact on vaults, but for vaults it's much less. You don't have a 100x leverage possible on vaults yet, whereas you can on DEX. And so when you're 100x leverage or even 50x leverage, of course, a small deviation in the Oracle price is much more impactful. So I think we'll see this spot starts to mature. The building blocks under those vaults and decentralized exchanges, as those mature and become bigger, there's more incentive for the people that are providing the infrastructure, so the curator, the dApps, the Oracle, the etc., to have bigger player and more serious players coming in and providing that.
Yeah, I think there's definitely a need to kind of build some sort of exceptional guardrails for Oracle pricing. We just saw on a few days ago, or it was last week actually, with the SK Hynix perp, essentially where you had a single executed trade on North Korea's next trade pre-market at the daily lower limit, which was about, let's say 29-30% lower than the prior close, that actually created I'd say a ripple effect through the hyperliquid market of SK Hynix perps, because you basically had that Oracle pick that single trade up, even though it was a small tiny trade compared to what happened in the DEX side. You saw the basically $57 million of notional liquidated across these accounts because the Oracle picked that up and immediately printed, and of course that kind of auto liquidates. So there has to be kind of some sort of, in traditional markets you have these halts, you have these guardrails that exchange operators have in place. Since the derivative coming from, in this case, a pre-market feed, a single print that economically could cost very little for malicious actor to push liquidations in the DEX is very feasible, and that's something I think we've kind of seen as a key mitigation factor for all sorts of crypto markets. Is you have to make the economic costs of market manipulation so incredibly egregiously high that it basically deters it. And that's what we've done with a lot of our reference rates, CF benchmarks. And I think that's something that's a bit lacking right now with the current infrastructure. If you look at how some of these liquidations are happening in kind of like these specific time zones where you have less liquidity and you can kind of push the price around a lot easier. So I don't know if James, you want to speak to that at all, or yeah.
Yeah, no, 100%. But I think it's a natural evolution. You do first Chainlink and Peace and Redstone and others. I think they've done an amazing job because they're innovating. They're doing something that wasn't possible before, and they're finding ways to do it, and they're finding ways for those decks to be able to work to a much higher quality than they used to. And so big up on them for doing that. I think it's normal that when you innovate, you break. You break, you innovate, you iterate, and it's not perfect, but it's better than nothing. And then when after innovation and breaking and that's kind of iteration goes once you've identified enough product market fit, enough demand, and the market has become big enough, as I was mentioning, then it becomes more profitable and more interesting and more appealing to more traditional players coming in and saying, okay, how do I provide the expertise that I have? You were talking about manipulation. You're right. In those Oracle, it's quite difficult to link the one print, how much liquidity underlines it, underlines it, and how much of the underlying market do you need to move 1%, for example, of the Oracle, etc. And so what are the dynamics? This is something that under benchmark regulation in the EU following 2008 on LIBOR, there's a regulation, right? There's reasons why ETP and ETF have indices that have guardrails, that have analysis, that have are somewhat regulated. But in the first instance, it's expected that you can't use that framework and you need to create something new. But now that we've done that, and now the feedback we're getting from especially market makers is, well, we want the same quality of service than we have on the big exchanges and the more traditional financial exchanges. And so that linkage between underlying and derivative is something that's super important and can't be a black box if you want to allocate a lot of money for both market makers and market participants.
Perfect. Look, guys, we're kind of running out of time, and so I want to do two things here with you all. First, it's going to be kind of a macro topic. Of course, we've seen how oil prices have come down with the hopes of some sort of truce with Iran and to get a deal to get the Strait reopened. My question is kind of a rapid fire. We'll go around the horn. Is a September rate hike officially dead? Yes or no, and maybe give a reason why, and then we're gonna finish things off with what are we watching for the week ahead. So I'm gonna start with Tomas because he's the chief economist, and I know he's been following this closely. So is a September rate hike dead in your eyes?
It's not dead, but I do think that the market is clearly signaling that relief in energy markets seems to be in insufficient condition. I mean, right now, the rate hike odds are just over 50% for September. They were stronger a few weeks ago. I think the relief in energy markets and some of the softness we've been seeing in the jobs data is providing a little bit more room for a hold in terms of market expectations. But I continue to believe that the majority or consensus on the FOMC is inclined to hold where we are today, even if that feels like marginally accommodative versus what conditions would require, on the premise that this is really energy shock driven and they should be looking forward through it.
Very good. André, you are a guest. I want to give you early dibs on this. And also, if you have any tips on the ECB, if you want to give us view on that as well. So I know you're very accustomed to that.
Yes, and thank you. So my take on the Fed is I think the markets do expect a September rate hike, and I actually agree with them. I actually thought that Fed would raise rates in July already, right? And one of the key reasons I think they raise rates is if you look at the T-bill yield, right? The 3 month T-bill yield has surpassed the Fed funds target mid rate by I think around 25 basis points already.
That's
And
a good
every
point.
time this happened, right, there was a rate hike by the Fed within like 1 month. So that's why I actually thought that the Fed would hike in July already. They didn't, but I think they guided markets in a way that it's now being priced in and anticipated. And I think it does make sense, right? If you look at the labor market itself, I mean, you've mentioned the ADP numbers that were actually quite weak, but I wouldn't read too much into it. If you look at more like leading indicators of the labor market, they've actually been firming, right? They've been improving. And such as like the ASA staffing index, like a weekly index of like temporary help services and so on, more like temporary labor force. And it's been moving up, it's been accelerating again, reaccelerating. And that tends to lead like non-farm payrolls and all of these other more coincident labor market indicators. And so I think labor market data could surprise to the upside over the coming months. And so I think the case for a rate hike will probably increase, right? But despite this kind of decline in oil prices and probably deceleration in inflation.
Very good. Mark and James, you want to give us, Mark, why don't you go first? A quick synopsis.
Yeah. At a high level, my base case is probably a hold still for September. Yeah, just that relief in energy markets is going to help. And the other thing that we have flowing through to help a little bit with some of those inflation numbers is we still have the last of the tariff inflation from last year rolling off. And then we have that semiconductor price inflation that really started late 2025, early 2026 that will continue to roll off in the index there. Yeah, I mean, look, if we do see the labor market start to pick up again, even with the lower inflation numbers, the hike's definitely back on the table. But I think the base case is still relatively unchanged for this year. I'd probably put that early next year if that's going to come in.
James, what about you?
Hike or no hike will depend, mainly on inflation, which a little bit further high level highly depends on. We saw China reducing year on year by 42% their oil demand because they've got massive reserve and they're tapping in it. And so 5.6% of the global consumption daily is absorbed by this. And so based on what China does, we'll see a massive impact on oil and therefore inflation.
If you want to understand why that price elasticity is that dynamic's playing out with all this, you have to understand what's happening in China and that ability to resupply the oil market quickly, despite the fact that the Strait of Hormuz has not really been fully operational since the war started. It's something that's pretty extraordinary to see. And it continues to kind of keep a lid on the energy complex. So it's a very good point, James. André, I see you got your hand up. Did you
I thought it was a really good point because Chinese oil imports essentially plummeted, right?
Yep.
And so at the moment that actually moves back up, which is quite likely, right? Because it's been an extraordinary decline, right? I think there will be more upside pressure on oil prices. And we also know that most of this kind of upwards pressure in oil prices has been mitigated via stockpile releases, right? Strategic petroleum reserves and so on. But like on a global basis, not only in the US, but also in Europe, in China itself, right? They released a lot of stockpile. And so I think that is keeping oil prices artificially low, where there's a lot of signal. I think is actually in petroleum products like diesel and gasoline that are still close to like their cycle highs, right? Because the stockpile situation is even worse, right? In these
It's true.
distillates and petroleum products.
Yeah, if you're driving a diesel truck right now, it's been frustrating, I think, to get to get your gas tank full. All right, let's go through our final rapid round. We call it the week ahead, which is where we go around and just give the audience what's top of mind for the next 7 days. André, since you're our guest of honor, I'll let you kick us off, and then I'll select everyone else around the horn.
So I'm obviously looking at ETP flows, right? We've seen this acceleration in net inflows. I'm looking into the daily data.
I think you just cut out there.
Yeah, I think we lost André.
He was saying that he's going to be looking at flows. André, when you're back, we'll let you continue. Sorry, you cut out there. I don't know if you want to do a redo. We got the flows part. Okay, I think André, you're still dropping. Mark, why don't you jump in real quick?
Yeah, for sure. So economic data over the next few days. NFP is tomorrow at 8:30. And then next week we got two big ones: CPI on Wednesday, and then we'll have PPI following that. So we're going to get to see what inflations look like with the volatility in the oil market. Another geopolitically, just going to continue to want to watch that situation in Iran. And then it's going to be ETP flows for crypto now that the Clarity Act is largely off the calendar for a month.
Perfect. Tomas.
Yeah, I think for me, the immediate term, everything to do with clarity, I think people have a very static view on the procedural side of things, like taking for granted that this current expectation is that they recess after tomorrow, but that can change, and with the politics, like it shifts very quickly. So I think that's going to be a very volatile event over the next 3-4 days. So we'll see how that plays out. Then the PPI, CPI reports next week, which historically actually do move Bitcoin more than the typical kind of daily moves that you see year to date. And then I also am looking for any kind of change or outcomes from this earnings season as it relates to just trends in ETF flows into semiconductor space. Because one of the things that's been interesting to watch is the deceleration in capital moving into semiconductors and AI stocks over the last month, particularly in July when you saw weakness in those stocks, and how that corresponded with Bitcoin starting to firm up on its price. And so I'm taking a close look at some of the kind of correlative effects between flows into those products versus Bitcoin ETFs.
Perfect. James, why don't you go, and then we'll see if Andre's connection's a little bit better.
Yeah, I'll look a lot at in the next few weeks at the linked relationship price action between Bitcoin and gold. We're seeing in China gold's paper gold being now banned, and physical gold now in storing, and so price discovery, we'll see what that what the impact of it is, and whether there's going to have an impact on the digital gold on Bitcoin. So
awesome, thank you. And Andre, I'm not sure if you've got a better connection, but I wanted to give you another chance here to close us out with the week ahead.
So I hope you can hear me now.
Yes.
Yes. Okay. Perfect. No, I mean there's been plenty of commentary already. I think ETP flows are clear focus. just to ascertain whether this trend has legs or whether we see a renewed reversal. Maybe on the risk side, I think what's interesting is that vol is pretty much compressed. If you look at intervals, they're in the low 1%, 2% percentiles, right? And so I think there's a lot of potential energy right below that is building up below the surface. And any kind of catalyst could either propel to the upside or downside. I rather think it's to the downside, right? But yeah, I think that's something that everyone should monitor right now, especially so light volts essentially.
Yeah, that's a really good point. And for me, I am going to be looking at the NFP report tomorrow very closely. Two things that I really want to be focused on is the revisions. I think if we see a lot of negative revisions, which has historically been the case, I think you're going to see that narrative shift on the labor market, where we saw earlier this year a lot of labor market strength, really strengthening the Hawks' view for tighter financial conditions and ultimately for rate hikes. So keep an eye on the revisions. The second thing is participation rate tomorrow. We've seen a drop in participation rate over these past few reports. And if you get any sort of mean reversion on participation rate where it increases, you're going to see that unemployment rate jump up, which is really kind of artificially suppressed the unemployment rate lower these past few prints. So keep an eye on the participation rate. That's going to be very important. I still am in the camp that, if I'm Kevin Warsh and I'm a person that doesn't not want to hike rates, if that's in fact true, I would be job owning at every chance I can to sound hawkish. It's going to be, watch what I say, not as I do type dynamic. And certainly, André had a great point there, looking at the 3-month and looking at the treasury market overall has tightened quite significantly. And that's what Warsh has been talking about in his press conferences. So I think he's very happy with where rates have set. It's very different from where we had in the last rate hike cycle, where rates were historically at the lowest levels and inflation was marching quite higher. So it's a very different environment than what we had back in 21, 22 with that great inflation spike. And so I think this does lead us, hopefully, with our base case still intact, which will be for no hikes through the year. So let's wait and see. I think we've had some great debate, great discussion here. I want to thank André for participating again. Where can the audience find your research again? We want to highlight your weekly publication, which is absolutely great.
Yes, thank you so much. I think the best way to find us is on bitwiseinvestments.eu. And that's like a big insights hub that you just click on it, you find all the
Perfect.
research.
Yeah.
And I think I also post on Twitter. So if you follow me here on Twitter at André_Dragosch, you'll find all of the relevant posts.
Yes, be sure to follow his X account as well. And that's it. That's the show. I want to thank everybody. If you joined late, don't worry. We're gonna have the recording up on all major platforms soon. And be sure to do your own research and always trade safe. Thank you all for participating.